There is one question that every single trade business owner should have sitting at the very front of their mind. How can I make more cash? Especially if you've just cracked the $1 million sales mark, or you're floating between that $2 to $3 million mark and you're looking to expand further. So today I want to talk about just that. In this short video, I'm going to run you through the 7 key levers that we personally use to help our clients, trade and construction business owners, to skyrocket their cash position upward of 1,200%, even if they've struggled with cash flow in the past. For those of you who don't know me, my name is Bayley Peachey. I'm a client advisor here at Trade Business Accountants, and we work with trade and construction businesses, typically turning anywhere between $1 to $20 million a year to help them build greater security in their business and dramatically increase their profits and cash. Let's do this. All right, so before we dive into how to make more cash, first I want to quickly touch on why I believe this is important. Now, in my opinion, cash is so vitally important within your business because whether it's in your personal life or in the business environment, cash equals opportunity. Cash allows you to seize opportunities when and as they arise. You can take advantage of this when others can't, right? So if it's in your personal life, it might be the ability to buy your dream house the second that it jumps on the market and not having to worry about being outbid by other people. Or it might be the ability to take your whole family on 2 or 3 holidays a year, right? It could be buying shares in the stock market as it dips, or being able to send your kids to a fantastic private school without having to worry about all the excessive fees because you've got the money to back it. So cash will allow you to take advantage of these different opportunities. Now, in business, in the business environment, the luxury of more cash could be as simple as just not having to worry about having no cash, right? Which might sound really obvious, but being able to operate effectively, purchase the right gear, or hire the right staff, or even fund and take on bigger projects, pay all your bills on time, not spiral into a panic when clients extend invoices or you get smashed by delays or weather. More cash is going to allow this to happen. So without cash, you cannot capitalize on these opportunities because as much as some of us would like to, believe me, you cannot pay for things with revenue or profit. It's cash that matters most. Now, fortunately for you, you're a business owner. And what that means is there is no limit to how much cash you can generate and just how much money you can actually earn in any given year. Now, unfortunately for you, you're a business owner. So what that also means is that limit goes both ways. You can earn massive amounts of cash or you can earn none. We have some clients taking home, over $1.5 million personally, but then I've also seen some business owners that are just getting by, barely being able to break even as a company. And that's still with paying themselves a below fair market-based wage. So not even being compensated for the work they're doing as an employee within the business, let alone getting a return as a shareholder for owning the damn thing. So as business owners, we control where we sit on that spectrum. We can either have a lot of money or we can have very little. Now, where the power lies in taking advantage of business ownership, in my opinion, is knowing what levers to pull and where to focus your time and attention to get the greatest results, right? And that's what I want to talk about today. So making more cash fundamentally comes down to doing 2 things, right? We want to increase our profit while we decrease our working capital. Now, if you're unfamiliar with what working capital means, working capital is simply the amount of money that you need to run your business over the short term. So if you increase your profits and you decrease the amount of money that you need to fund your operations, you will naturally generate more cash in your business. Now, the faster you generate more cash in your business, the faster you accelerate your ability to capitalize on the opportunity in your business and personal life. This is what it's all about, using your business as a vehicle to give you greater opportunity in your life and in your business. So now let me run you through exactly just how you increase your profit and you decrease your working capital. Now, whether you believe it or not, there are only 7 key levers that you need to use to flood your business with more cash. And these 7 levers sit both on your profit and loss statement and on your balance sheet. So to increase profitability, we look at things like price, volume, cost of goods sold or COGS, and every item of your overheads, again, all found within your profit and loss statement. To decrease the working capital, what we do is we discuss things like accounts receivables, your WIP or stock days, and your accounts payables. And these are all items found sitting within the balance sheet. So 7 levers, 4 on the profit and loss, 3 on the balance sheet. If you want to make more cash in your business, it's only these 7 levers that need to change. This is all you have to focus on. And I think the best way to explain this and help demonstrate just how powerful these really are is probably through an example. So what I'm going to do now is run you through an example of a real TBA client that for privacy reasons, I've renamed to XYZ Electrical. Now, XYZ Electrical, they have a great business. They've been operating for many years now, but when they came to us, among wanting, bookkeeping, tax, company structure, handled a little bit better, they simply wanted to know how to get a better ROI from their business, which is what a lot of people want when they come to our service. So what I'm going to run you through now is how we help them pull that off simply by using these 7 key levers. Like always, first what we did was calculate how much cash they had made, right? Now to do this, we first identify how much did they make in net profit, which in this instance was $150,000. We then calculated how much working capital they invested in 2021, which was $120,000. That is $100,000 plus the $70,000 minus $50,000 equals 120. Then lastly, what we did was calculate how much other capital they invested in 2021, which was actually $0. So that's 150 grand plus negative $30,000 plus $0 minus $120,000. So what this means is in 2021, XYZ Electrical actually made $30,000 in cash. So after making $150,000 in net profit, they were only left with 30 grand worth of cash. Hence why they were actually looking to understand, how can they get a better ROI from the business? They're doing pretty good. They've got a decent turnover, but they want to be rewarded. So the way that they saw it, they were working really hard. They were taking on a lot of risk. And aside from a pretty, decent wage, they didn't feel like they were being rewarded properly for all the effort that they were putting in throughout the entire year, which I actually agreed with. So what we did was simulate, what cash impact could we generate based off this performance if we were to simply use the 7 levers, which looked a little something like this. So looking at this table, based off XYZ Electrical's financials at the time, these were the impacts on profitability and more importantly, cash from just 1% changes across the 7 levers. So by just adjusting their 7 levers by 1%, they could put an extra $59,000 worth of cash into their bank account, which is actually a 300% increase in cash, which I don't know about you, but I think that's pretty damn cool. But here's what we actually did. We actually helped them increase their prices by 10%, which caused them to lose roughly 10% of their overall volume. Now, at this point in time, most business owners would probably be in complete panic, thinking that they've just ruined their business. They'd be on their knees yelling, what have I done? But what you need to do in these instances is model things out based off data and facts. So when price is 4.5 times more sensitive to cash than volume is, that is for every 1% increase in price equals, a $19,000 increase in cash, whereas 1% increase in volume was only $4,300 in cash. The decision to increase their prices and then drop some pain in the ass, price-driven headache clients was really a no-brainer. And also, this 10% increase in pricing was, in my opinion, a massive step in the right direction of a more profitable business model with a pricing strategy that better matched the actual quality and experience that they deliver to their clients. And as another note, sales would have to decrease 4.5% for every 1% increase in price for our client to actually be worse off purely from a cash perspective. And I can confidently tell you now, we've never had a client lose 4.5% of their workflow from just a 1% increase in price, not even close to that. So investing the $1 to get $4.50 back was, again, a no-brainer, really. So in this case, as I said, our client lost 10% of their volume with a 10% increase in price. And in the process, they made $147,000 in cash. Outside of price and volume, what they also managed to do was reduce their COGS by 5%. So cost of goods sold. What this means is they were able to be more efficient in their delivery, having better structure and planning to their days and their crews and how they operate, better leadership, and also being able to source much, much better deals from their suppliers, right? We also reduced their overheads by 10%. So this was really done by just going through with a complete audit and cutting out just a whole bunch of unnecessary stuff. Half the things that we got rid of were things that, they were investing money in every single month, but they'd actually forgotten about, and it wasn't providing any value to the business, and it just didn't need to be there. They also managed to lower their receivable days, their payable days, and their works in progress / stock days by 2 days. So pretty small change, but what they were able to do is collect their money faster, invoice for their work faster, and slow down and better maximize how they were paying their suppliers by just renegotiating some supply terms, right? And all up, what this did, using the 7 levers and making these small changes, it resulted into an extra $317,000 in cash, which is literally almost a 1,200% increase from the prior year. which is really, really cool stuff. So if you want to make more money, you want to earn more cash, you want to get a much higher ROI from your business year on year, then it all comes down to knowing simply what levers to pull and where to focus your time and attention to get the greatest results. You now have that. You now have your 7 levers. And just like our client XYZ Electrical, you too can get much, much greater results in your business, no matter what stage you're even really at. So it really is as simple as this. Using these 7 levers, how many 1% or one-day changes do you want to make in your business? So keep it simple, put your focus on these 7 levers and go get after it. I hope you found this video helpful. Be sure to like, follow, or subscribe for more training released every single week, and I will see you in the next one.